Hi, my name's Leon Rowe, currency trader and trading coach at trading180.com, and welcome to this week's Forex technical analysis on supply and demand zones. If you're a new subscriber, welcome. A new watcher, if you're a returning watcher and subscriber, welcome back. And I hope you all had a great trading week last week. This is going to be quite a long video. Probably between maybe 30 to 45 minutes. So if you do want to just skip to your favorite pairs and the pairs that you do trade, there is a timestamp in the description box below. But, you know, I advise you to kind of watch everything if you're new to supply and demand, so you can gain you know, a grasp on how I trade supply and demand zones and the things that I tend to think about, some of the things I tend to think about when looking to enter on a trade. Now, before we get into the technicals, just to let you guys know that I have released a fundamental analysis spreadsheet, as Forex pairs and prices are driven by fundamentals and sentiment, not price action, like is currently believed, and that's just my belief. I've got some compelling arguments for that, but I won't get into it now. Maybe in another video. And this is just my opinion on fundamental analysis on each currency pair, and this is based off of, you know, economic data which I get from tradingview.com, right? And if you want to know how I've come to these conclusions, why I'm bullish on the dollar, you know, neutral bearish on the yen, you know, on the CAD, etc., there's a fundamental analysis course which you can sign up to. Again, the link is in the description box below. Take you to this page, right? Watch the fundamental sentiment analysis forex trading course, right? Here are the videos, and you can get the spreadsheet by clicking on the link, and it takes you to obviously here, and I basically just update it as and when I see fit. So last update is going to be, it was obviously today, 19th of August. And this is basically my bias. This doesn't include sentiment, so you know, obviously risk on and risk off. This is just looking at the fundamentals. So just be aware that even though neutral bearish on the Japanese yen, some of these currency pairs like the yen and the Swiss will react to a risk off environment, meaning that if there's uncertainty in the market, you know, capital tends to flow into safe haven currencies like the yen and the Swiss. And you know, basically, just because I'm bearish on the yen from a fundamental perspective, doesn't mean that I'm going to be shorting, you know, the yen in a risk off environment. In fact, I might look to buy the yen or the Swiss in a risk on environment. If you don't know what risk on and risk off is, again, sign up to the free fundamental analysis course. This is much more than just looking at Forex Factory and looking at economic data releases. You know, you're going to learn about business cycle, gross domestic products, inflation, interest rate cycles, you know, useful tools, sentiment, etc. Right? A lot of information, right? This is the reason why a lot of traders tend to think fundamental analysis doesn't work, but it's the primary, you know, these are primary reasons. Understanding how to establish value comes from fundamental and sentiment analysis, right? Anyway, so let's get into the technicals, and we're going to start off as we normally do every week on the US dollar index. So US dollar index on a daily time frame chart, we've come up into, well, actually last week we did have this, we had a supply zone here. We kind of broke through it, and then we've come down, and what we've created is a new supply zone, right? Supply is coming in here. It's not necessarily the strongest area of supply yet, right? Even though there is supply in here, it's taking out some, you know, some demand here. But I wouldn't see prices, you know, potentially come down a bit further, all right, before potentially looking to, if you were looking to get short, you know, you might want to see a bit more, you know, supply, but that doesn't mean that you can't, if prices do come back up into here, not get short. But we wouldn't necessarily be shorting the Dow Jones dollar index anyway. We would be looking for just dollar strength and weakness on the Dow Jones Dollar Index, as it's a strength and weakness indicator of the dollar, right, against a basket of the major currency pairs. Then we would look for correlating supply and demand levels on other dollar related pairs like the dollar yen, dollar Swiss, dollar franc, and then correlate that into our our trading bias and whether we want to get long or short. So for example, if prices come back up here and then we get some sort of double top pattern and you're looking to get short on the dollar, then you'd be looking to obviously get short on the dollar yen or dollar Swiss, right, if it was also at a supply zone. And that's really how we look at use the Dow Jones Dollar Index, right, for trading dollar pairs. So last week we kind of broke through and then came back down, created this supply zone here. So if you are looking to potentially get short, right, and the dollar is at a supply zone on any of the dollar pairs, then you might want to look to get short and take advantage of potential profit taking, etc. Right, doesn't mean that because prices are going down that the dollar is now weak. Just means that there's potentially some profit taking before prices potentially move higher, right? I'm looking to for hopefully the dollar to really come down to this first level of demand, and then look for buying, right, opportunities on other dollar pairs. But if you're looking to short right now, if this is too far away, right, then you'd be looking for shorting opportunities, potentially on a double top on here, and then like I said, go to another forex pair and look for double bottoms or double tops on those, right? So those are your options right now. But also I want to turn your attention to the weekly as well. So the weekly time frame on the dollar index, we're up into this supply zone, and we're putting in this bearish candle, bearish pin bar again. Just because you see a bearish pin bar doesn't mean it's a reversal. What you really have to do is look into why this is a pin bar. So this could just literally be profit taking, right? It doesn't mean it's going to be a reversal. Again, prices are driven by value and fundamentals, so not technical patterns. So prices could come down as well. But if you are looking to be a buyer of the dollar and looking at the weekly time frame charts, this is what you would be looking for before looking for a long, right? So let's move on to the US dollar, Japanese yen. And this is what we've got right here. Come down, touched this demand zone several times, right? Last week we did come up into this supply zone and put in a reversal. And if you are looking to get short on the daily time frame chart, right, these daily time frame zones, then what you would do is use intraday time frames like the 4 hour or the 1 hour, before looking to get short. If you see a pattern that you like, reversal pattern or your entry, right, then you would be looking for price to come up into this zone and then look to get short. And what we also have is supply and demand technical analysis basics. So supply and demand zones, which I give you, value ranges, and value ranges are just you basically understanding where you are in a potential range. So demand zones, this is going to be the cheapest area, this is an expensive area, and if you want to know why this is an expensive area and this is a cheap area and this is a fair value zone, then you can watch the introduction into supply and demand, right, and that would basically show you the methodology and really the understanding why for supply and demand zones, right? So this is the first cheapest area if you're looking to buy the dollar, right, at value. The dollar potentially, well, I suppose demand zones, the more times they're touched is the weaker they become, right? So I'm not necessarily a fan at this level. I'd probably be looking for prices to come down to a bit of a lower level, especially as we have on the dollar index some potential say weakness, but potential profit taking, right? So if prices do come down to this demand zone here or anywhere around here, then on the dollar in US dollar, Japanese yen, we could see prices obviously come down to this level here, right, or this level here. Yeah, I do expect prices to kind of drift down anyway in the lead up to FOMC this week, right, and just go into some some fundamental analysis. We've got FOMC, you know, the week ahead. We've got some, you know, policy statements as well from the Federal Reserve, ECB, and Reserve Bank of Australia, right? So US investors await the FOMC minutes on Wednesday. So there'll be some positioning, you know, with regards to what traders are looking to, you know, buy or sell, right? With the dollar, depending on, you know, the policy and whether they're going to be raising interest rates another, you know, in the coming months, right? So potentially, you know, we've got a buying opportunity here. If not, basically you're looking to buy down, you know, a bit further down, which is a better price. If you're looking to sell the dollar, this is going to be your entry right here, right? And again, just going through technical analysis basics. Supply and demand order equation, basically where we're trying to figure out where the most supply and demand orders are, and we look for confluences within these supply and demand zones, so horizontal support and resistance, you know, diagonal support and resistance, and dynamic support and resistance, right, which is the moving averages 2150, 100 and 200 EMAs and SMAs. So let's say, for example, you want to be a buyer down here. Do you have, you know, the 100, 200 confluence? Yes, we did. You know, last week we had the 100 prices. You can see as prices came down, bounced off of here, right, and then ended up going higher, right? And then you would do the same thing for, you know, the 21 and the 50, right? I use moving averages, not to tell me which direction to trade, but just for dynamic support and resistance, where other traders would be looking to, you know, buy or sell off of, you know, bounces and touches of these levels, right? So and again, like I said, you would just use diagonal support and resistance if it lines up with trend lines. If they line up with this area, then brilliant. If they don't, then not to worry. The main thing is you're buying at value and you're buying at supply and demand zones as well. But we just look to see where other traders are potentially looking to buy. That adds to you know, the supply and demand equation, who's taking profit and who is potentially buying off of different support and resistance zones. So moving on to the dollar Swiss. Dollar Swiss, we have prices have literally just been, you know, in this supply zone. Last week we've been really in this really kind of tight range between you know, this high and this low, you know, that being fair value right here. So if you're looking to get short, right, where you are right now, if you think the dollar's going to get weaker, this would be a decent opportunity. Again, just look to potentially get short on any you know, candlestick entries however you enter. If you're looking to buy, then you'd be looking at this area of demand as the first area to try to get long, right? If you're looking to get short, again, this would be your second area. And then within these demand zones or supply zones, again, just look for horizontal support and resistance, diagonal support and resistance, and dynamic support and resistance. And I'm thinking that what I might do is make a video as an example, and then what we can do is just link to that video rather than going over it every week. So yeah, I'll make a supply and demand technical analysis basics video so you can see the process of how to potentially enter, right? So yeah, so from the Swiss franc point of view, I would probably say you can see that this level was touched various times. Support and resistance, you know, resistance, resistance, support here, resistance, resistance, resistance. If you did get short here, right, you could have made some bit of profit. Right, I'm a buyer of the US dollar, so I'm not looking to necessarily get short, so I'm kind of ignoring these supply zones. I'm looking for prices to really come down into any of these areas here before looking to get long, right? But again, do your own research. I'm not a financial advisor. It's just trading opportunities and levels and things to, you know, really how to kind of think about the market in terms of supply and demand and really value, right? So moving on to the dollar CAD. And this week we've had, you know, prices really come up into this zone and kind of sell off, you know, twice. I think it was on Friday we had, I think it was inflation figures, I think it was, and the inflation figures for the Canadian dollar beat expectations. So you got this you know, this sell-off here right? So the CAD is potentially, you know, strengthening on another potential interest rate hike, right? You can see where there was a bit of, you know, support here this week, sorry, resistance here this week, right? If you kind of zoom out again or zoom in, right, where you've got, you know, support, prices break through, resistance, and then this was really an entry around here if you're looking to get long on the CAD versus the dollar, right? So from a daily perspective, we're in this range between this low and this high for now. So if you're looking to buy the dollar, you know, be waiting for prices to really come down into this demand zone. Again, look for any of these you know, a combination of these or any of these confluences to determine the supply and demand order equation at a level and see who's taking profit, who's buying, support and resistance levels, and then you'd be looking to buy. If you're looking to sell, you'd probably be looking to obviously prices to come back up into this level, yeah, or potentially I would say that area right there where you've got a bit of support and then a bit of resistance right here as well. So you're looking for prices to come up here and then reverse off of here, right? And again, if prices fail to you know, hold round here, this would be a next demand zone. Again, just look for diagonal, dynamic and horizontal support and resistance. So moving on to the New Zealand dollar, US dollar, right? We did get a bounce off of this demand zone right here, you know, pretty much pinged off it, and now we're seeing in conjunction with, let's go back to the US dollar, you know, some dollar weakness right here. You can see on the New Zealand dollar we've got some I wouldn't say New Zealand dollar strength, but again, like I said, potential profit taking. If you're looking to get short, this is the first area if we can get up here this week. If you're looking to buy, I'm probably gonna have to put in a new zone, right, because there is some demand here. There is a bit of demand, right? So that would be where you'd be looking for prices to come down to before looking to get long on this currency pair. Again, if you have any confluences, let's look at the 100 and 200. We're way up here from the 100 and 200 if we're looking to get short, so pretty best to look for maybe the 2150. Yeah, so if prices do come up to here, this area here, it might align with the 50, you know, SMAs and EMAs as prices do come up here. The 21 I'm not too concerned with. Yeah, that might be a decent trade to the short side. All right, looking at the pound dollar. So again, prices are potentially making their way, you know, higher, not necessarily based off of any pound strength, but you know, just dollar profit taking this week, and depending on what the expectation of interest rate hikes are. To buy this currency pair, in fact, there is some hidden supply right here, right, as we've got an outside candle there. So if you are looking to get short, your first area would be around here. But if we're looking at this from a value perspective, you're really buying at the lows, right? So value range, you're really buying at an expensive area if you're buying the dollar here. If you're looking to trade really on maybe the 15-minute chart, then this probably looks like, you know, you've got enough pips to the downside to really you know, enter. But I enter based off of 4-hour time frame charts, and this is really kind of buying at the absolute, I say absolute lows, but quite low down into the range. So I'm not necessarily keen unless there is really kind of bearish price action. I can get some good risk reward to the downside. But if you don't necessarily get an entry on this daily demand zone, let's go back to the daily time frame chart, then the next real area is kind of, you know, really up here, unless prices do create some sort of higher high, higher low, and then come down, and then you get that as your supply area to look to get short, right? Moving on to the pound yen. So pound yen, again, prices coming up into here before looking to get short, right? If you're looking to get long, we've come down into this demand zone here. So again, if you're looking at buying on an intraday, let's go down to a 4-hour chart. This looks pretty decent if you think that prices can actually, you know, go higher than this. But just a word of warning that, you know, again, the Japanese yen is a safe haven currency, and the pound is going through some risk sentiment regarding Brexit. So the pound isn't necessarily the greatest buy in the world for the next, you know, until probably March, April, and maybe even after that, simply because of, you know, Brexit and stuff like that. So if you are looking to buy and take advantage, maybe some short-term profit taking, this would be the area right now. If you're looking to, you know, get in short side, you know, on the yen, buy the yen against the pound, then this would be a first area you'd be looking for a short. Moving on to the pound Swiss, and you do have some, you know, hidden supply here. I'm reluctant to put a demand zone here, because even though you do have demand coming in, it's, you know, it's really just tiny demand. So I'm not really going to put any kind of demand zone here until really we kind of maybe break above this this supply zone, and then I would say, yeah, we got a decent area of demand, right? Again, looking to potentially trade short, but just be aware that you are, you know, trading at the lows, but our next demand zone is here. So if you do get in short, you know, right now, then what you'd be looking for is, you know, riding it down to the this demand zone right here. Yeah, if we're looking to, don't want to take that, then again, the next, you know, on the daily, I doubt it will ever say ever, but it won't get up here, you know, anytime soon. That'll be a next supply zone. So this doesn't look like a bad entry, to be fair, to the downside, if you want to take advantage of, you know, pound weakness, right? But fundamentally, the Swiss franc isn't in the greatest position either, you know, with negative interest rates, etc. So just bear that in mind. Moving on to the euro dollar. So we came down into this demand zone right here, and then we've put in obviously a pin bar, and we're making, you know, some moves here. So we have reacted again. If you're looking to be a buyer of the euro right now, it's probably gone a bit too high, so you'd probably have to wait for some sort of pullback at some point before looking to try and get long. If you're looking to get short, your first shorting area here is going to be this area here, and again, this might coincide with prices on the dollar index coming down to here before looking to get long, right? So it's looking decent as far as, you know, correlation and some confluence, right? And again, looking for supply and demand order equation. So what we would do is look for potential trend line, right? Look for where we got some potential trend line confluence. If prices do come back up into here this week and around this area, that'd be great, because there'll be traders trading, you know, looking at this obvious trend line to look to get short, right? And you've got supply, you've got this diagonal resistance, you've also got potentially horizontal support and resistance from this area here, right, where you've got resistance, support, 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 resistance. You've got that lining up, and then you've got some dynamic support and resistance, you know, probably regarding the 21 and the 50. Yep, so the 50 is within this area too. So if prices do come up, you know, quite drastically this week, maybe about 100 pips, 200 pips potentially this week, this could be the area where you know, the first area where you're looking to potentially, you know, get short to the downside and buy the dollar versus the euro, right? But that's the analysis, and that's just an example again of, you know, how I look at applying my technical analysis basics, and there's a lot more that goes into the figuring out why I would want to trade this as well, right? You can find out a bit more on the site and the supply and demand technical analysis course. So moving on to the euro yen, and we've come down this week into a nice demand zone right here. So if you are looking to be a buyer of this currency right now, and talking about buyer of the euro against the yen, now's not is a decent time. I'd probably be waiting for a pullback on an intraday time frame, as I think prices may have gone a bit too far. So yeah, looking for potential prices to come down, and then look for you know, more of a better entry. But obviously the downside to that is that prices could shoot straight up. So it's just you know, a personal choice of whether you want to, you know, risk you know, what's that, maybe 150, 160 pips, you know, on this, and it's not necessarily even a pip thing, it's more of a percentage thing. So even though you've got 150 pip risk, you would just basically calculate that into you know, your risk percentage, right? I'm not really a pip accumulator or a counter. I'm more just, you know, risking, you know, percentages on my account. So 150, 160 pips is not, you know, a big deal if I'm, you know, risking obviously, you know, 0.5% of my account, you know, per trade. So from a selling perspective, again, I think if you want to get short at the moment, this is going to be your first area to get short, right, on the euro yen. Again, just take into account sentiment. You know, you've got Turkey and you know, the problems that they've got, the yen being a risk currency. So if we do, you know, get some negative sentiment, right, and risk off environment, then this, you know, probably will end up, you know, breaking down to the downside. So just think about maybe where you're going to be taking profits if you want to get in and out, or if you do want to hold this, you know, this trade, then just be aware of the risk sentiment. Euro pound, and we've got this area here, and I actually entered on this touch here of this demand zone, but from a trading position and direction, probably looking at anywhere around the highs of this level to try and get short if I was looking to get short on this pair. Looking to get long, again, you'd be waiting for prices to really kind of come down into this zone here before looking to get long. And I'll just show you, you know, my entry. It was on the 6-hour time frame chart. Prices came down here. This outside candle here was my entry, right? Stopped just below the lows, and I'm up a few pips. So yeah, about 40 something pips with about a 35, I think it was 35 pip risk. So just more than a 1-to-1 at the moment. I think, you know, the pound's going to have some sentiment against it. Euro had I think inflation came in better than expected, so, you know, some positive stuff going on. So yeah, so those are your options if you're looking to potentially get long on the euro. Again, you'd probably be waiting for a pullback. Looking to get short on the euro, then, you know, really up here would be the area, and you can see from, you know, this area here that we've, you know, touched this a few times. But as we know, the more times the level is touched, the weaker it becomes. So just be aware that if you are looking to get short, that you know, prices, you know, the level may not hold or, you know, be as strong as you think it is, right? We always want to take advantage of first or second touches of levels. Third, fourth, fifth touches, you know, becomes quite, you know, weak. So the next level to try and get short is definitely going to be, you know, all the way up here. So it's quite far away, but yeah, so those are your options for the pound, euro pound. Going on to the euro Swiss. I also entered on this trade as well, this demand zone, and prices came right down into this area right here, and my entry was on the, I think it was the 6 or the 8 hour. That's it. It was again the 6 hour, right? It was around here on this candle as prices. But by the time I woke up in the morning, prices were around here. So I took the trade here, and I'm up, I think was about nearly 100 pips or so. So my risk was about 60, yeah, about 65, I think it was 65 pips, and now I'm up around, yeah, the higher end, so about 90 pips. And let's see if we can get you know, a bit of a runner on this, right? If you are looking to again short this would be the first area to get short. If you're looking to, you know, get long, waiting for kind of a pullback within this zone, and then looking to potentially get long. Euro, Australian dollar, this has really kind of been without, you know, outside of the zones. If prices do come up into this area here, this will be the first area to try and look to get short. If you're looking to get long, this for me is a decent area to try and get long. From a technical perspective, the euro and Australian dollar are pretty much neck and neck when it comes to neck and neck. I say the Australian dollar is probably a bit in a better position than the euro. So if I'm looking to my bias is more to the Australian dollar than it would be to the euro. So I'll be looking for probably shorts into this area here. But from a technical perspective, I do like this. This demand zone for a buy, but I don't think I will be buying the euro unless something again fundamentally changes with the Australian dollar or the euro. So those are your two options. Looking at the Australian dollar, US dollar, again we've come down, bounced off of this area right here, this demand zone, and we've put in, you know, some bullish price action. At the moment, if you missed out on this, you'd have to probably be waiting for some sort of pullback before looking to get long. If you're looking to get short, this is going to be your first area again to try and get short. Let's do a bit more analysis on this one. We can see if we got, you know, some confluences. So if you're looking to buy the dollar, looking at that area there. Now, so we don't really have any diagonal confluence there, but we do have a bit of horizontal confluence here within that area. Some support, resistance, and dynamic. So let's see if we got the 100, 200 in this area. Potentially the 100s are coming down. The green, EMA and SMA are coming down into this zone. And then we look at the 21 and the 50, probably the 50 is underneath this level, so potentially may not get right up into say I may not get right up into there, but we haven't got any confluence, not as much confluence in this zone as we would like. But that doesn't mean that we shouldn't enter the trade. It's just, you know, looking at where traders are buying, you know, and selling potentially within this area. But the main thing is just determining value and supply and demand zones, right? That's the main thing. Everything else is just a bonus. And also finally looking at the Australian Japanese yen. We've kind of broken out of this range slightly. I was talking to a trader today, and basically just saying that I think this potentially could be a stop hunt, right? So you've got basically the range there. In fact, you know, I'll draw it as a value range, right? So prices have really been ranging between, you know, this low and this high for the past, you know, few months, right? And then you've got you know, stop losses below here, and traders would call this potentially a false breakout. We don't know whether it is yet, right? But I know for sure that traders would have been putting their stop losses below obvious levels of support and resistance, because that's the only place to really put them. You can start to see where, you know, stop hunts are occurring, right? But if we're in a risk on environment, then this would look an absolute bargain for the Australian dollar, right? I am a bit bullish on the Australian dollar, as you can see from my fundamental analysis, right? Neutral, slight bullish, and obviously for the Japanese yen, I'm a neutral bearish. So I do want to be buying this currency pair. So even though it's come down here, it's just risk sentiment is really putting me off slightly. But if we can get some risk on, you know, this would be a decent buy to the upside. But if we're looking at, you know, a sell, then we'd be looking probably at this area here. If prices do, you know, come all the way up here to potential fair value, actually fair value would have changed, because this would be, you know, the range from here to here, or we'd be ranging from here to here. So prices may come up into fair value or just above fair value around here, and then look to get short depending on whether you got risk off sentiment coming into the market. So Australian dollar potential buy right now if prices do come back down into this demand zone, and then look for a long. Or what happens is, matter of fact, if we do get prices move higher, and then we get a pullback into a level where we potentially got some demand, then look to get long, but that probably won't play out for another, you know, potentially for a few weeks if it does play out. So which I will obviously update you on. Yeah, so that's the end of the technical analysis. Hope you enjoyed it. If you have any questions, just email me at info@trading180.com or leave a comment in the, you know, section box below. Hope you again found this useful. Please like, please subscribe, please share. It would be very helpful. And again, if you want access to the fundamental analysis course, there's a link in the description box below. Watch the course. And it should keep you on the right side of the market when you understand really the reasons why you know, prices move, and really it comes down to how to determine value, right? Technicals is pretty much, if you just trade in technicals alone, it's pretty much impossible to determine value. Yes, you know, there's trend trading and stuff like that, and again, in another video I'll get into why you know, trend trading isn't all it's cracked up to be. And if everybody, you know, who was trend trading was profitable, why is it that, you know, you've got you know, 80%, 90% of traders that fail, right? So again, that's another discussion. I hope you have a great trading week, and take care, guys. Take care. So if you'd like to receive the best supply and demand Forex levels absolutely free, click on the link in the description box below, enter your email address, and we'll send you the levels that we have just analyzed in this video. You'll get all of the major Forex currency pairs, and you'll get regular updates and never miss a Forex trading opportunity.